Hey, what's going on, everybody, and welcome to your weekend briefing for the week starting June 26th. In today's show, we're going to look at some interesting earnings that are coming up this week. We have some really interesting economic data coming this week as well. We'll take a quick look at this Russian mutiny, coup, fiasco, whatever you want to call it. Yesterday I was quite concerned about it and how it might affect markets, and today not so much, although I'm still a little on the fence on whether it's going to affect markets or not. Anyway, we'll talk about that in a little bit. We've got lots of charts to look at, of course. We will look at some of our previous setups, and we've got some new setups to look at, but I'm, again, you're sort of on the fence about these a little bit. I want these to set up for another couple more days, but we'll see what happens. All right, let's move on here. Go ahead, smash that like button if you like what we do here. It really helps us out. I am Kevin D in the Discord, full-time trader with 25 years experience studying for the CMT Level 2, and a mentor in the investor community since 2020. And why don't we move on from here and talk about why we do this every week. We do these videos every week to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and mentor sessions. And going forward, get to watch these videos. We'll talk about that a little more next week. So check out down the link below in the description, and come join us on Discord. We'd love to have you there. Before we go any further, quick little disclaimer: everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's do this. We'll get right into this here with our earnings this week. Starting tomorrow morning before the open, Carnival Cruise Lines. Now, most of the cruise lines and airlines have had a really strong rally lately. So it'll be interesting to see what happens with Carnival. Carnival is actually, if they didn't have earnings today, Carnival would definitely be on our list of stocks to play this week. A beautiful little bull flag set up there. But they have earnings in the morning. So maybe that bull flag breaks out to the upside, maybe it doesn't. Let's actually depart from what we normally do here when we're looking at earnings and just take a look at that bull flag, seeing as I've been talking about it. You can see that bull flag. I mean, look at that. This is a thing of beauty. So we expect to see this break out to the upside. But like I said, I mean, look at this run up into earnings. Big gap up even here. I think that was when Norwegian Cruise Lines had earnings. So, maybe this has gone too far. It's a tough call. I think it will be worth watching in the morning, though. There might be a play in there, and you'll probably see me mention this in the morning briefing newsletter. All right, let's get back to the rest of our earnings here. Before the open on Tuesday, we have Walgreens Boots Alliance. That can be in a fairly important company. I mean, they do a ton of revenue, so can be market moving. Big in the consumer staples index. Nothing really terribly interesting, I don't think. The rest of the day on Tuesday. Before the open on Wednesday, another big consumer staples company, General Mills, and also UniFirst, really. So lots of, this week is kind of about consumer staples mostly. After the close on Wednesday, though, we have Micron, semiconductor company. It'd be really interesting to see what's going on here. I mean, there's always something going on with this chip war with China, and Micron was affected by some news in that recently. So it'll be interesting to see how that plays out. We've got BlackBerry as well on Wednesday after the close. HB Fuller down here is a home builder that could be interesting, and actually we do have some home builder related stocks to look at later on that might play. On Thursday before the open, Rite Aid, obviously very similar company to Walgreens Boots Alliance. And then after the close on Thursday, we have Nike. That one is definitely important. And Friday before the open, we have Constellation Brands. So that pretty much covers it for interesting earnings this week. Let's move on and take our economic reports. So on Monday, nothing. Calendar is totally empty on Monday. On Tuesday, we have a fairly busy day. We have durable goods orders, That's important. We have consumer confidence. That's important. And we have new home sales, which is important when we take a look at a couple of new setups that we've got. So we'll look at that later on. On Wednesday, Jay Powell is participating in an ECB panel discussion. ECB is the European Central Bank, in case you didn't know, and they are doing a conference, and Powell is going to be in one of their panel discussions talking about monetary policy. What else? So this could be important. This could potentially move markets. We already know he's kind of hawkish. Does he maintain that tone? Does he go a little dovish? You know, any little surprises there could definitely move markets. On Thursday, we've got final GDP. Not expecting any surprises here. This is final GDP for the first quarter, by the way. This is the last GDP print of 3 that we'll see for the first quarter. And again, usually there's no big changes by the final. We also have unemployment claims, as we always do on Thursdays. Friday, this is a big one because this is the Fed's and Jay Powell's favorite inflation metric, and that would be the PCE price index. So we will be watching that as the market will watch that closely on Friday before the open. All right, what do we got here? Our short-term market regime tracker. We are still, firmly in the bullish chop area. We had moved up actually quite strongly into the number 7 on the bull trend. We got up there for a while, but this latest little pullback has knocked us back a bit to a 4. Let's move on now and take a look at some charts. We're going to be looking at major indices, international markets, important commodity sectors, and setups we're watching, plus some new setups. So let's dig right in on this. We'll start with the S&P 500 and maybe, we'll start right here. As you can see, firmly in an uptrend. But over the last week or so, or actually starting a week ago Friday, we had that big red pullback candle and continue to pull back all week. Not surprising. After the run, that we've had, it shouldn't surprise us at all to pull back. I've been talking about, ever since really the beginning of the week, I've been talking about how we probably pull back into this 428 to 430 level, right where this line is. And you can see we've got, earlier in the week when I first mentioned it, we had the 21-day exponential moving average was sitting right there at about 428. I think it's a very reasonable place to expect us to pull back to, and you can see as time goes on that we're moving more moving down into this trend line, which I think is healthy as well. So a bounce in here, even if we pull back a few more days, and then bounce in this area and start moving back up again, very healthy move. Now, tomorrow. For the markets. And again, I mentioned this Russia thing, this Russian coup or mutiny or whatever you want to call it. I'm not sure how the markets are going to be affected by that. So, in case you're living under a rock, you have no idea what's going on. This Prigozhin guy, mispronouncing his name, sorry, dude. He runs Putin's private army, basically, the Wagner Group. They've got soldiers stationed all over the world. Tens of thousands of soldiers stationed in little hotspots all over the world. There's a bunch in Syria. There's a bunch in Libya. But they also, of course, have, I think, 10 or 20,000 in Ukraine. I've been fighting in Ukraine, and their leader has been getting really pissed off with the Russian Defense Ministry and making threats. And he finally followed through with those threats on Saturday morning, and took over a city in southern Russia, right at the Ukraine border. Started moving towards Moscow. Said, "I'm coming to Moscow because these defense ministers won't meet with me to discuss their issues, so I'm bringing the fight to them." And, threw Russia into a bit of a disarray, really pissed Putin off, of course. And then, all of a sudden, he, after some meetings with the president of Belarus, who's also a good buddy of Putin's, called it all off and started pulling it back. and now apparently is being exiled to Belarus. The whole situation is just bizarre. And so is it a big nothing now, or are we going to see more of this? I suspect there's still some shoes to drop here, and none of this makes Putin look good. Makes him look a little weak. Why didn't he do anything before this completely got out of hand? And now, in a way, I mean, Putin's had to concede to this guy a little bit. So yeah, it'll be really interesting to see how this plays out going forward. But again, does it affect markets so much? Probably not, because in a way it looks like it's resolved. If this had still been turning into a major issue in Russia, if they're turning into battles outside of Moscow or something, then yeah, that'd be a different story. I think we would have seen markets pulling back fairly hard, and then maybe bouncing. As people think, this is going to end the war in Ukraine and everything. Definitely worth watching to see how it affects markets, but probably going to turn into a big nothing. Then, if it is a big nothing, what we've got to look at here is this chart and what is going on in this pullback. Thinking it pulls back more, we bounce, and I think my most likely outcome here is we bounce, we get back up into this high right here, and can't go any further, and then we end up in a consolidation in a range. Now, whether that's between this 445 area at this high here, actually let me draw that in as a pivot because I think it's going to be important to us. We could for the rest of the summer, I think, consolidate in a range between here up and around 444 and maybe this 428 area, maybe even down here in the 420 zone would be an area, you could definitely see a consolidation in here for the next couple of months until we get into September, and then maybe something happens. Now, that's the most likely outcome, in my opinion. We could also see a move back up into this, fail to make a higher high here, and that spooks the market. And then that sets off a correction. And we see a 5 to 10% correction from that level. I think this is less likely than just a well-behaved consolidation, but what does a 5 to 10% correction look like? Well, 5% takes us down very close to 420. 10% is going to take us back down to this gap and almost fill that gap, and also right where that 200-day moving average is. Now, I think that's a little much. I think we've got a lot of areas of support before we get down there. So even if that did happen, I wouldn't be too concerned unless we broke this 420 level. Then we'd probably be looking at coming down and testing the 400 level. But again, this is not my most likely scenario, but it is a possibility. Now let's move on to the Qs. We've got much the same thing going on here, a little bit of a pullback. Already though, later in the week, trying to find some support here after basically closing this gap. So let's just delete that gap fill out of there. Now you can see we've got a couple more gaps below that. We've also got the 21-day moving average and some support and some trend lines. So again, wouldn't surprise me to see this pull back a little farther, test some of these down here, that 21-day moving average for instance, and then start to turn up. And same story with what I was talking about with SPY. If we fail to break above here, I think that sets us off to pull back a little more and then, move into a consolidation, a wide consolidation for the rest of summer. And all of that would be healthy to digest all of this big move up. A couple months of consolidation, nothing wrong with that here. Especially moving into the fall. And then the fall, we, kick off the rally that we often see in the fall, and then moving into Christmas. I'm maybe getting a little ahead of myself here, but that would be, I think, a very likely outcome for the rest of the year. And after we've had seasonally, I've seen some data on this. After we've had a really strong run up like this in the first half of the year, we do tend to continue later in the year after a pause during the summer. So there's strong seasonal evidence to back up a continuation higher, through the rest of the year, but also a pause through the summer. Now, IWM, on the other hand, this is not looking so good here. This has had quite the breakdown here in the last week. We have moved down into an area of support. You can see we're right at the 100-day moving average right now. We've got that 200-day moving average there. We've got this big consolidation that we're just above as well. Let's just move this over a little bit here so we can see that. So we may get a couple more down days. We may even get a flush. A little spike down into this zone, the 50-day moving average here, for instance. That would be a good place to look for support, and then a move up. This is already, I think, drawing out the kind of consolidation zone that we should expect through the summer here. So probably a little bit more downside here on this IWM before moving back up into this zone and consolidating between, say, 188 and 178 or so, 180. All right, let's move on to our VIX. Now, the VIX is not saying that anything bad is coming at all. There's maybe a little too much complacency here in the VIX. You can see we're well above this, we're above this very strong support area at 12. I would be surprised if we got lower than this through any of this. But it's interesting that to see the VIX falling, and somebody in the Discord pointed out this divergence, and I thought that was really insightful of him to be pointing that out. This divergence, how the the indices and the markets were basically pulling back, and VIX is pulling back with them. And I think that shows that the market is not concerned about this pullback. It's a normal pullback. It's healthy, and we're going to see buyers come back in. It's what happens later, a week or two from now, once we get back up to and test those recent highs. I think that's when we could see trouble. But for now, VIX is saying no trouble ahead. Let's look at the 10-year yield. And we are consolidating sideways in this. No action here, really. Let's go and take a look at our dollar index. That's not our dollar index. Here's a dollar index. And you can see that this has got a downward channel going on. This dollar index did have a couple of strong up days in the last couple of days. And this could be maybe currency markets telling us that, hey, there's something going on in Russia right now. If you had been paying close attention, you would have known, for a while something's been going on in Russia. But over the last couple of days, Thursday, Friday, in retrospect, there were strong clues that this guy, the leader of Wagner, was going to do something. And so, yeah, maybe we'll see that on the currency chart. Now that it's all over, the dollar probably rolls over. And that, that behaves well with the technicals as well, coming into the 21-day moving average, coming into the top of that channel. So wouldn't be surprised to see the dollar move down a little bit here. Let's move over to our dollar cost averaging system, and you can see that all systems go still in the SPY, still very green. The MACD is, rising nicely. Nothing to concern ourselves with here. In the Qs, same story, of course. IWM is the one where, this is showing a potential danger as well. We are about to break through these moving averages, and when we do, this will turn to pink, flashing a warning sign. But if you look down here at the MACD, we can see that's already started to roll. It's just starting to curl a little bit here and could turn down. Now, when this does turn down and the MACD crosses below the signal line, that will turn the dollar cost averaging system in the IWM and any of the small caps back to red again, unfortunately. And it looks like that could very well, it's got a really good chance of happening this week. But again, it might just sort of chop back and forth, kind of like we did here, where we go from, red to green to red to, and just get a little choppy in there. So that is that. Where are we going to go next here? I want to look at our all-world index. This is all-world less the S&P 500, or less U.S. stocks. And you can see that we were consolidating, chopping around, tried to break out to a new high here, and rolled right over, and rolled over pretty hard too. So again, it will be interesting to see how this plays out tomorrow with all this Russian stuff. EFA, Europe, developed Far East and Australia. You can see that rolled over quite hard as well, but it's back down to the bottom of this big consolidation zone here, and a really important support level. Should probably actually move the importance on this support level up a notch. Come on. There we go. Yeah, that's going to hold. If that doesn't hold, I think we could see a fairly quick move down here to 68. Emerging markets, less China. Same sort of thing, same sort of price action here. Really rolled over here, now into an important support level. And finally, China large cap. Again, not looking great. Broke through an important support level again. I failed to make failed to make a higher high here. Not looking great for China. All right, let's move on to gold. This has moved down into, after consolidating, broke out the bottom of the consolidation, has moved down an important support level. Silver has done pretty much the same thing. Come down to a really important support level. You can see the 200-day moving average right there. This really should bounce here. If this doesn't bounce, I don't know. I mean, does it come all the way down and test this here? Copper. Copper was making a nice move back up again. And look at that trend line failed, and failed hard on Friday. So that's pretty interesting. I'm going to watch this and see how this plays out, because this is important for global economies. Crude oil. Where are we going on this? Well, you can see on Friday, this had a little bit of an up channel. Friday, it fell out of that up channel, but drew a nice hammer candle on pretty decent volume too. So this could very well turn into a reversal. You know what they say, from failed moves come fast moves. So if that adage is true, should see oil move quickly to the upside. Would that be enough to break out the top of that resistance zone? Time will tell. Nat gas. Interesting move over the last little bit. You remember a while back, we've been looking at this rounding bottom in here and expecting that this would break out of this resistance quite strongly. We have failed to do that. But, on that failure, it didn't move down all that much, and it's really kind of drawn another rounding bottom. Or you could call this a cup with handle. You could call this whole pattern actually a cup with handle, with the handle being another cup and handle. And it looks like on Friday we started to break out the top of that. This is looking really interesting in here. Maybe there's some plays in some natural gas, some natural gas stocks. If this would continue higher, because look at, we've got this rounding bottom, and then now we've got what is a higher low. What we haven't put in yet is a higher high, and I think that's coming in here. All it would take was, I'm not sure how the weather is back east. Maybe the weather is heating up back there, but a good, decent heat wave back east with everybody turning on their air conditioners, that would be enough to really, really pump this up. Okay, XLE, the energy ETF. This is mostly following oil, of course. You can see though, down at a support level. If oil and gas start moving up together, then this is going to move up strongly, and there could be plays in this energy sector again. TAN, on the other hand, this is do or die right here for TAN. TAN really in trouble, not looking healthy. Massive move down over the last week, trying to find support, and a little bit of a reversal here with volume on Friday, right at a support level. That really needs to hold for TAN and those solars. Okay, let's look at consumer discretionary. This has been really strong, has been taking a little bit of a break, a very small break over the last week. This old gap now is filled, so we can, I think we can delete that old gap out of there. It's interesting to see, though, the top of that is pretty much acting as a pivot and resistance. Let's draw that in right there. Okay, so now you can see we got up to that pivot, started pulling back, but are drawing a nice bull flag in here. So obviously we expect to see this to break out to the upside, but I'd prefer just a couple more days of consolidation and then break out in there. And I'll be looking for some plays in this consumer discretionary space. But you know, in my scans earlier today, there was nothing showing up in the consumer discretionary space that looked any good, which is really interesting. You know, I wasn't seeing any nice setups that look like this. It's a little odd, really. If you've seen anybody, let me know in the comments. You know, if you have seen setups in the consumer discretionary space that look like this and that look like they're ready to go. Industrials. I did find a couple of potential plays that are in this space, though, which is interesting. Now we've got this declining wedge flag, and we would expect to see that. As unhealthy as that looks, we do expect to see these wedges to break out to the upside. And you can see we had a nice little doji right here, right at a support level on Friday. So maybe this is ready to move to the upside. Who's next here? Financials. Messy, not pretty, really rolled over, came through the first level of support, you know, crashed through all the moving averages except the 50-day moving average where it may have found support on Friday. Jury's still out on this one. Not a space I really want to play in. The regional banks, to go along with that, of course, look even worse. They came down through their support level. Yeah, not looking good there. Healthcare. Healthcare is still in this downward channel. It's been unable to break out the upside of this downward sloping channel, but it looks like it's making a try at it here. Got a little bit of a consolidation right there, so that's step one to break out of that. Biotech, on the other hand, not looking great, other than it did stop right at a support level on Friday, and you've got the 50-day moving average there. So if it's going to bounce, this is a great spot for biotech to bounce. Consumer staples. I don't think there was much going on in any of the defensive sectors. No, they're just kind of chopping around, going sideways here in all these defensives. Utilities, same thing. Big red candle, though, on Friday. That might be something to watch out for. Oh, did I skip over REITs? I think I did. Yeah, and REITs, another one of the defensives, still in this big consolidation zone. Looking a little weak on that pivot, though. All right, let's move over to technology. This is obviously the more important sector. You can see that we've pulled back. We've pulled it back right to the level of that old consolidation back there, and just above a 21-day moving average. And again, just like with the Qs, I wouldn't be surprised to see this pull back a little farther before it goes higher. It could very well turn right here, though. I mean, this is a support level. There's no reason why this couldn't turn. I just kind of feel it's got a little more downside for a couple of days. Communication sector, though, has already bounced off its 21-day moving average and a support level. Still isn't going to be able to get through its 10-day moving average, though. But this does look like it wants to move higher and move higher now. Semiconductors. This is another one of the sectors that looks like it needs to pull back a little farther. However, that 21-day moving average is right there, and we had a doji in there on Friday, so maybe it's ready to move back up. NVIDIA, nice little bull flag in NVIDIA right here. Put another new all-time high in earlier in the week. I believe that was Tuesday. And nice tight flag here, and bounced on Friday right off the 10-day moving average. This one looks ready to go. Keep an eye on NVDA and the other semiconductors as well. Meta, it just continues to grind its way up along that trend line. Extremely well behaved on Meta, but doesn't really give you a chance to get in, right? These pullbacks are tiny, so it's, you know, next to impossible to get in that one. Apple, this put in a new all-time high on Friday. Again, really well behaved on this trend line. You know, I mean, it doesn't even come down to the 21-day moving average, right? The 10-day moving average has been supporting this for quite a while now. No reason to believe that won't continue to go higher and just keep riding along that trend line. Amazon, this had a, I think it was Friday, was it up? No, Thursday was the big day. Had a bit of a consolidation, pulled back a little bit there, and then had a big up day on Thursday. A little bit of an indecisive candle here on Monday, though. Netflix. This one has rolled over a bit. Another one of those stocks I think we need to see come down to, you know, a support level which is down under here in around that 21-day moving average. But that may turn up now too. Certainly will. If, you know, if the market rallies on Monday, that will certainly move up from there. Alphabet, Google. This is, you know, as earlier I was talking about how maybe we consolidate through the summer. Well, I think Google is showing us the range it probably consolidates in if that happens. May break down here and come down and test this 50-day moving average or this gap, but I don't know. It looks like it wants to move up a little bit from here. And again, that's another, you know, big name obviously in the communications sector that we figured was probably going to move up. Okay, a couple more. Microsoft. And that riding along its trend line nicely. This could be a little bit of a setup. You know, nice tight consolidation here. If it breaks out above, you know, I would say a breakout above Thursday's candle probably takes you at least up into that pivot up in there. So, you know, could be a little bit of a play here for moving away to the upside from that trend line and these moving averages. Probably wouldn't be too much in it. I mean, where are we at? 335 to 350. It's only $15. It's not, you know, not awesome, but could be something there. Might be worth it. And Tesla. So Tesla getting a little messy here. I'm actually surprised this didn't immediately, when this pulled back and had this big bearish engulfing candle here on Wednesday. Surprised that they bought the dip so quickly on Thursday. I think there's more downside here in Tesla. I think it really has to come down and, at the very least, fill this gap and hit this, you know, tag this 21-day moving average down here. Maybe even come down, you know, as far as the 210, 205 to 210 area down here. But I think that, yeah, I think we're going to see more downside here to at least, say, 235. All right, let's look at some of the setups we have been watching. We've been watching some of these lithium stocks, and nothing really happened. I mean, we were looking for a breakout here of this little bull flag, and we got it, but it was a one-day wonder, basically. You know, really nice move if you were quick in there and then you were quick to exit the following day. Or, you know, if you didn't get out, if you had used all of this consolidation, this mess here to get out, you would have made, you know, a little bit out of this. But this has since broken down. SMAR, Smart Sheet. We were looking for a short back here. You know, we were looking for a breakdown out of here. That didn't materialize. It went the other way instead. But look at all of these moving averages right there, and it could not get through. And then it failed quite nicely. So if you had been paying close attention here, maybe you would have been shorting in here. But again, just gets just below that level, and it finds some support in there. So yeah, this one's off the table as well now. And moving on to some new setups. Okay, just keep in mind with all of these, I think that most of them kind of need a couple more days. But this one, MOD, Modine Manufacturing. This had a nice move up after its earnings. It pulled back a little bit, and it's got this nice tight consolidation going on here now, and getting even tighter on Friday. So pretty easy to define your risk off of that candle, and there's not much risk sitting there in that candle either. And look at the volume on that candle. I'm not sure what's going on there, but you know, obviously a buyer and selling doing some battle, or maybe there was a big block trade in there. But you know, I would buy for myself personally. This is not investment advice, but I would certainly buy a break above this consolidation, and then with a stop either below Friday's candle or below the consolidation. Bit of a no-brainer. Lennar, this is one of the home builders that we were talking about, and again, we've got a nice consolidation. It had earnings not long ago, moved up a bit on those earnings, is consolidated. Let's just actually tweak that up a little bit there, and you can see this is nice and tight, very risk defined here. Looks like it wants to make another leg up here. So that's in the home builders. And this company, the AZEK company, this is a building products company, so a supplier to home builders. I saw a couple of these that were setting up. You know, I like the look at this. In fact, I want to, on this one, where do we go back to? Yeah, you can see that, you know, this put in a cup with maybe a handle and another cup. And so it's got all this sort of rounding bottom action going on here. And you notice how we are making higher lows. We have just been unable to make higher highs yet. But it's certainly, this is what we want to see, right? We want to see this, if, you know, we've got a resistance level, pushes up there, pulls back. Pushes up there, pulls back, pushes up, pulls back, but these pullbacks are getting smaller and smaller and smaller, and when this is building a lot of energy, so that when it does break out of here, it really goes. This is probably my favorite setup of the week right here. Pretty obvious what you do. You buy the breakout with a stop, you know, just below the low of Friday's candle, trying to move that up as soon as you can, because the problem with breakouts in this market is they just have not been working great. But they will start working really well again, and you know, maybe they start really working really well with this one right here. Okay, last one is MRVL, semiconductor. We talked about some semiconductors. We talked about Micron has earnings coming. Now, you know, this doesn't look awesome here, except when we really zoom in. So, okay, so we had earnings, we had giant gap up. We've come down a little bit into that gap, and on Friday, you know, broke down. This Friday candle was a little bit of a breakdown here, right? But it came down, it got below the 21-day moving average, and then it reversed intraday, and it did it on decent volume. And closed above that 21-day moving average. So this could keep going on tomorrow. It's gonna probably need some help with the market, because this was a fair bit of weakness here. But this I could certainly see this put in a V bottom here. So really, I mean, the thing to do, if you see some momentum come into this on Monday, you just got to hold your nose and buy that momentum. But you know, if it starts losing momentum and pulling back hard, just get out. You don't even want to wait till a close below here. You want to be watching this on a 2-minute or 5-minute chart, and on any slowing momentum in there, any you know, any rollover and speed to the downside intraday, you probably just want to get out, because if this is going to V bottom, it should just keep going up. So that is all the charts we wanted to look at. Let's go and take a look and see what we've got coming up this week for our members. So on Wednesday, we're going to be doing Ticker Talk, where our members come in and we analyze their tickers. Those are always fun sessions. So if you're not in the Discord, come join us. We've got a lot going on in there, and always looking for new setups and good plays to take. So thank you everybody for watching. Don't forget to hit that like button, share with your friends, and subscribe. We will see you again soon.